You may think that when you take some cash to a bank and deposit it, the bank takes that money and sticks it in a vault somewhere to wait until you need it again to turn it back over to you.
Okay, how would you like this?
Like 2, 10, 1, 5, and 5, 1.
Okay.
The bank does no such thing. It immediately takes a large part of what you put in and lends it out to somebody else. How do you suppose it earns interest to pay its expenses or to pay you something for the use of your money? The result is that if all depositors at all the banks tried all at once to convert their deposits into cash, there wouldn't be anything like enough cash in the banks of the country to meet their demands. In order to prevent such an outcome, in order to cut short a run, it's necessary to have some way either to stop people from asking for it or to have some additional source from which cash can be obtained. That was intended to be the purpose of the Federal Reserve System. It was to provide the additional cash to meet the demands of depositors when a run arose.
It was all a question of reassuring the public that they could get their money. The Federal Reserve System was there to ensure that this happened by supplying cash to the banks.
Why didn't this system prevent the Great Depression after 1929? Because from 1929 to 1930, after the stock market crash, the Federal Reserve System allowed the quantity of money to decline slowly, thereby throttling the monetary structure. By December 1930, the quantity of money had fallen by 3%, which may not seem much, but a growing economy needs additional money in order to prevent deflation and problems. Given this throttling of the monetary system, what happened after that was more or less inevitable. If the Bank of the United States had not happened to fail, some other bank would have been the victim. It would have failed and would have set off the runs. Once the runs started, the Federal Reserve could have prevented them from having the disastrous consequences they did by stepping in and providing the banking system in general, through creating new money, with the cash it needed to meet the demands of depositors. After all, once depositors start trying to take their money out of the banks, there is a strong tendency for the quantity of money to fall. Each dollar of cash which is withdrawn from a bank had been backing several dollars of deposits. If the Federal Reserve had stepped in, bought government securities on a large scale, provided the cash, the depositors would have found that they could get their money and they would have stopped asking for it.
Ironically, the people at the New York Reserve Bank knew that this was the right policy. No one had advocated it more forcefully than Benjamin Strong, the first head of the bank. Tragically for America, he died 2 years before the real crisis. With the death of Benjamin Strong, a truly remarkable man who not only ran the New York Bank, but was also the key figure in the entire Federal Reserve System, a struggle for power broke out between New York, the other banks, and the board in Washington. New York lost, the other banks, and even more, the board in Washington won. That was a little-noticed event, but it was the first step in that massive move of power to Washington that has dominated our lives ever since. Then and now, this building housed the U.S. Treasury Department, but at that time, the Federal Reserve Board also had its modest offices somewhere in the same building. The shift of power was sealed a few years later, when the board got its own magnificent temple a few blocks away from here on Constitution Avenue. Despite excellent advice from New York, the system refused to buy government bonds, something which would have provided cash to the commercial banks with which they could have met more easily the insistent demand of their depositors. Instead, believe it or not, the system stood idly by while banks crashed on all sides. As the head of one of the banks put it, the reserve system had to keep its powder dry for a real emergency. But if this wasn't an emergency, what was? As bank after bank closed, a chain reaction was in process, destroying money as it went.